Hey everyone, and welcome Live in Ottawa. And in this week's episode, we're going to cover the Canadian trends to watch for in 2022. But first, show reel, hit it. Hey everyone, and welcome to my new YouTube studio. We're actually going to be fixing up the place over the next few weeks to give it a little more personality. But if you feel that there's something you like or you don't like, let me know in the comments below about how I can dress up the new studio. Let's talk about 2022 in the Ottawa and the Canadian real estate markets. No one could have predicted the roller coaster of events of the past 2 years. Upheaval due to the COVID-19 pandemic confounded our expectations. And what we initially thought would be a large and lasting decrease in home sales only stuck around for a few more months. And by late spring of 2020, demand began to rise, and with it, prices. And throughout the entirety of 2021, we saw increasing demand, increasing prices, and rapidly decreasing supply. And these conditions were not only present in Ottawa, but almost every single market in Canada saw home prices rise in 2021. And as 2022 started off with a bang, it shows no signs of slowing down. In fact, January of 2022 feels a lot like January of 2021, with surging home prices, multiple offers on properties, and another pandemic lockdown. And some things are different though. We know more about the virus, and some aspects of life are starting to return to what we could call the new normal. So what does that mean for real estate? Well, let's take a look at a few of these trends from the latest RE/MAX report. This is what industry experts predict will influence the market in 2022. First of all, that rise in prices we saw in 2020 and in 2021 is probably going to stick around. The RE/MAX analysis did not expect a repeat of the explosive double-digit growth of the past 2 years, but prices are expected to continue their rise across the country, and prices won't go up at the same rates from market to market. The prediction is a range from 2.5% in Calgary to about 20% in the Muskoka, and smoothing out those peaks and valleys leaves us with a predicted average home price increase of 9.2% nationally. And the housing market is not immune to inflation. We've seen consumer prices rise on all sorts of goods and services due to COVID, and hopefully we'll see that inflation level off soon. But what about some of the factors that drove housing surge that we saw in 2021? At least two of them are expected to be in play: interest rates and the housing supply. Interest rates were cut in March of 2020 and at the beginning of the pandemic, and they haven't gone up since, but that's expected to change. In fact, as we currently shoot this video, the Bank of Canada may be looking at raising those rates within the next few days. And that prediction is based in large part of the economic recovery that has been ushered in by vaccines and the resumption of businesses across Canada. Everyone is hopeful that Omicron doesn't reverse those gains. But we also know that the real estate market has shown itself to be very resilient in the face of lockdowns and other public health measures. And not only the very beginning of the pandemic saw a decline in activity, it's been full steam ahead for real estate ever since. But what about those interest rates? Traditionally, a rise in interest rates comes with the risk of the cooling off of a hot market. And predictions have been that the rise will only be around 1% total for the year. And with high demand and short supply, that increase is unlikely to push too many buyers out of the market. And the shortage of affordable homes was one of the largest driving factors of increasing prices last year. The focus of both national and provincial elections, the supply of affordable housing was not seeing much improvement, with experts predicting the immigration of 1.2 million people to Canada by 2023. Supply will remain a major issue. Those living in Ottawa see firsthand that difficulty of finding an affordable home. Moving to Canada is going to get more difficult unless some strategies are enacted to relieve the supply crunch. RE/MAX executives have put forward some solutions to the supply problem with what's been brewing long before the pandemic. They suggest more coordination between federal, provincial, and municipal governments to develop a national housing strategy. They also believe that incentives can help people over some of the hurdles that currently exist with both new construction and selling existing homes or resale homes. The suggested incentives come in the form of cutting some of the bureaucracy for builders and easing the financial burden for potential sellers. Tax rebates are proposed for both groups. Another way to ease the supply shortage in major cities is to focus on the growing economies of smaller markets. The world has changed, and not everyone needs to live in a major metropolitan area anymore. Remote work has increased interest in smaller cities and towns, and the interest is already there. The government has a subset of home buyers who want and are able to live in smaller markets, but it has to do more to reach them and boost the desirability of the areas in question. Of the last two trends to watch, one is predictable and the other one is new and exciting. As you would expect from everything we've talked about, industry experts predict that the seller's market will continue. Even if everyone pulled out all the stops and started adding to the housing market today, it wouldn't be enough to create the buyer's market before the end of the year. Intriguingly, another trend the experts are looking at is virtual transactions. Just as offices discovered that you could function remotely, so did real estate agents and home buyers and sellers. Digital paperwork and virtual tours are not likely to go away. They're convenient, easier than previous processes, and they allow more people to see more homes in more areas using less time. Why would anyone want to give that up? Think of the smaller markets and how they can benefit from these changes and advances in technology. A family can look at houses all over the country instead of choosing a single location for their search for the perfect home. That's not to say that people are going to be snapping up houses sight unseen, but it does mean that there is a greater flexibility within and between the housing markets. Living in Canada doesn't have to mean choosing between Vancouver or Toronto. And living in Ottawa might mean choosing a small town an hour from the city center. 2022 has started strong for the real estate market, and predictions are that it will remain so throughout the year. And if you're moving to Ottawa or you're selling a home in the area, and if you have questions about the market, feel free to reach out to us. Give us a call, shoot us a text, send us an email, even wrap it up in a bow and send it first class, because we got your back. We're moving to Ottawa or anywhere across Canada. Each and every week, we're bringing brand new videos just like this one. So make sure to tap that subscribe button and click the bell so you're notified each and every time we do a brand new video. Till next time, take care. By the late spring of 2020, demand began to rise, and almost. Give us a call, shoot us a text, send us an email, even wrap it up in a bow and send it first class. As 2022, even wrap it up in a bow and send it first class.